Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Thursday, 27th October 2022. The fun continues. I'm having fun. So, NASDAQ futures down again. What used to be a great company now it's just a real head scratcher. Zuck continues to plow more money into the metaverse. No slowdown in sight in terms of cap spend for him, despite Altimeter Capital's best efforts and others to try to smooth the spending in what looks to be tough times on the come. But no luck. Instead, that stock down 23% this morning. Good gravy. Just a destroyer of capital. Apple and Amazon also down as well for those of you indexers out there. I don't know, what is that, 10% of the S&P looking down pre-market, one of which on significant bad news, the other two on no news yet. But Russell looking up, and Dow looking up quite a bit. Cat and Honeywell, Merck leading the way there. Honeywell and Cat, strong quarters for different reasons. Caterpillar seeing demand for products that serve the energy patch. Honeywell is seeing aerospace tailwinds. We talked about that a long time ago, and we've talked about that for a lot of this year. We own Honeywell for the aero exposure, but also the company is more like a software company now than it ever has been in its history. So that we found compelling. I actually don't know why it's up so much. The quarter was okay. I don't know. I got to take another look, but nevertheless, we don't own enough of it to really make a big difference. I'm definitely not buying it more on the gap up here, that's for sure. S&P failed its first test at the 50-day moving average, traded above and faded, not good action. That 50-day right around 38.60 S&P. We closed at 38.30 yesterday. I think that's important to recapture in the near future if this rally is going to be intact. See what happens today, because you've got bonds down, rates up, dollar up. So if the equities can mount a charge in the face of rising rates and a strong dollar, that will be a change in trend. So the UUP, that's ETF you can use to track the dollar. It's 50-day moving average. It fell through yesterday. A lot of technicals coming into play here today. So UUP fell through the 50-day, but may look to capture it again. Maybe look to recapture it today, as you do a dollar bid this morning out there. One thing that I saw last night, I saw some of the semis ticking up in the after hours. I was like, what's going on? So it's metaverse and in their desire to spend all the money on the planet. They're going to increase spend on data center. So that ticked up AMD, Nvidia, Marvell, probably to a smaller extent Intel. On that, that's noise in my opinion. If you're, it's too early for semis. That's my opinion. One thing that is, so Wolf came out as one of the silicon carbide semiconductor companies that's actually been doing well. I haven't looked at the quarter yet, but stock's looking down huge, like 20% in the pre. It's going to take Air Test down with it. Air Test is it's a version of Semi Capital into that silicon carbide space. We are holders of Air Test. We've talked about it. It's had a great move. We sold some at 23 yesterday, just thinking it's gone a little too far, too fast. It's going to trade probably all the way down around 20 today on that Wolf news. This one I think is a buy on the dip. You've got so many silicon carbide companies out there testing their equipment. They did announce a new customer a couple of weeks ago. I think that trend's going to continue. So, I mean, the Wolf thing, it's just gonna hopefully it's gonna provide an opportunity. I don't know if I'd buy it right away. There's gonna be you got people that made a lot of money on this thing that might look to bring the register. So this thing could trade down 19 and change easily. It has been very volatile formerly, a little less so recently, but I expect volatility to come back into that name. So today, big day for the moving averages. Pay attention to what we're going to do. I don't think we're out of this whole mess yet. And also, my public service message to active management once again. I think it's a different environment now. You got these big components of the S&P 500 that are probably just going to be sucking wind for the near term, and you've got smaller components, other companies that are less weighted, whether it be energy or what have you, that are doing quite well. You got to ask yourself what you're doing, in my opinion, if you are index or passive. And that is all I got. Have an awesome day. Talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.